Hello, dear viewers, and welcome to the fifth episode of the series GST in Pictures. In the fourth episode, we saw the concept of time of supply. In this particular session, we are going to cover the concept of composition levy, which is covered under Section 10 of the GST Act. Now, what are the topics or areas that we are going to cover in this particular session? We are going to cover registration forms under GST. Then what is composition scheme? Who can, who cannot? What are the various rates under composition scheme? Features of composition scheme? Benefits and drawbacks of registration under composition scheme. Let's take one by one. So one basic point that we have to understand is composition scheme is covered under Section 10 of the GST Act. Now, as far as registration is concerned, an SSE can take any one of the two kinds of registration that we have under GST. Either the person can register under normal scheme or can register under composition scheme. Now, normal scheme, as we understand, the threshold limit of turnover is around 40 lakh, beyond which registration becomes compulsory. How much is the registration threshold limit as far as composition scheme is concerned? So basic idea of composition scheme is it is meant for small businesses. It is meant for small businesses whose area of operation is very, very limited. So we will check that about the forms of the features as far as composition scheme is concerned. So before we get into that, let's understand who cannot opt for composition scheme. So there are four categories of dealers or suppliers who cannot register under composition scheme. First one is manufacturer of ice cream, pan masala or tobacco. So manufacturers of these items cannot register under composition scheme. Then we have person making interstate supplies. I just mentioned, if you register under composition scheme, your area of operation is very, very limited. An interesting point that worth mentioning right here is IGST concept is not available as far as composition scheme is concerned, and under that outward supply, because there is no question of outward supply to another state. That's why there is no question of IGST amount collection at all, because any supplier registered or any business registered under composition scheme cannot undertake interstate supplies. So the area of operation is only the state or the union territory, you can say. Third category of people who cannot opt under composition scheme is casual taxable person. We need to understand who is a casual taxable person. Say basically, let's take example, I am registered in Mangalore in Karnataka. Say I am let's say a jewelry dealer and I prepare exquisite jewelry. Now in Mumbai, in Maharashtra, let's imagine there is jewelry exhibition come sale, where all the international jewelers will be exhibiting their, their art, and also for the purpose of sale. So I take quantity of jewelry and I travel to Mumbai for exhibition come sale. But important point is I have registration only in Karnataka in Mangalore. But I'm going to do business now in Mumbai. And if I have to do business in Mumbai, I need to take what is called as a temporary registration under Maharashtra state. That temporary registration is only for the limited time for which I'm going to operate in Mumbai, that is exhibiting my jewelry as well as selling it as well. So I don't have a permanent place there in Mumbai, Maharashtra. I am just taking a temporary registration. So such a person who is operating from a place outside the state where he has no registration, such a person is called as casual taxable person. So such a person cannot opt for composition scheme. And in that list, we have non-resident taxable person. So definitely a person who is non-resident in India also cannot opt for composition scheme. And final category of list of people is businesses through an e-commerce route. So if I am registered under composition scheme, I cannot undertake e-commerce business. So you can say, it is restricting. But as I mentioned, composition scheme itself is meant for small businesses whose area of operation is limited. So manufacturer of ice cream, pan masala or tobacco cannot register under composition scheme. So also no question of interstate supply, no question of registration for casual taxable person or non-resident taxable person, and no doing business under e-commerce route as far as composition scheme is concerned. Let's get into a little bit of insights into composition scheme. Now, as I mentioned, Section 10 of GST law covers the idea of composition scheme. Very important. What is the threshold limit? If a person or a business person has to register under GST, his turnover should not exceed 1.5 crore. So turnover less than 1.5 crore. Now, as far as the special category states are concerned, like Himachal and northeastern states, as far as composition scheme is concerned, the threshold limit is 75 lakhs. So the turnover for the year cannot exceed 75 lakhs. But other than those northeastern states as well as Himachal Pradesh, the turnover less than 1.5 crore, a person can register under composition scheme. Then manufacturers, dealers, and restaurants not serving alcohol can opt for composition scheme. So manufacturers, dealers, and restaurants, that is, which are not serving alcohol, they can opt for a composition scheme. They can register themselves under Section 10. Then very important point is there is no input tax credit available as far as composition scheme is concerned. We will be understanding this. So turnover less than 1.5 crore in a normal, registration as far as composition scheme. When it comes to special category states, it is not more than 75 lakhs in Himachal Pradesh and northeastern states. Then manufacturers, dealers, and restaurants not serving alcohol can definitely register under composition scheme, but no input tax credit is available. Now, a basic question that we ask. We mentioned about traders, we mentioned about suppliers, and we also mentioned about restaurants not serving alcohol. They can opt for registration under composition scheme. Now, a question that we usually ask, can a service provider opt for composition scheme? And the answer to this particular question is a yes. Yes, service provider can opt for composition scheme, but there are points that we need to understand. That is 2 points. One point is exclusively from the trader or manufacturer's point of view, which are also doing what I should say service business as well. So it's a mixed business, supply of both goods and services. So what is the rule? Notified under CGST, that is 2019, dated 7th March 2019, where the turnover of services is rupees 5 lakh or up to 10% of total turnover, whichever is higher. So 5 lakh or up to 10% of the total turnover, whichever is higher. Now, this rule is applicable for traders or manufacturers. And exclusively for service providers, we have aggregate turnover in the preceding financial year up to rupees 50 lakh. So point to note, if an extensive service provider's turnover exceeds 50 lakh, such a service provider cannot claim registration under composition scheme. He will have to register himself under the normal scheme of GST. Now, as far as traders and manufacturers are concerned, right here we have traders and manufacturers, they are concerned. So turnover of services is up to 5 lakh rupees or 10% of total turnover, whichever is higher. This is for mixed, for those who supply both goods and services. But very important point, service provider can opt for composition scheme. Next, what are the rates that are applicable? I mentioned about one is manufacturers and traders. For manufacturers and traders, the composition scheme GST rate is 1%. That is 0.5% CGST and 0.5% either SGST or UTGST, depending upon whether the composition dealer is registered under a state or any of the union territories. Next is for restaurants not serving alcohol, it is 5%. It is 5%, and it will be divided among the central and state government as 2.5% each. And the last is just mentioned for service providers, it is 6%, 3% CGST, and 3% either SGST or UTGST. So this 1% rate, 5% rate, and 6% rate, let's understand, is applicable only under composition scheme. It is applicable only under composition scheme. And nowhere in the scheme, if you check any of the three blocks right here, there is no mention of IGST at all. There is a mention of only CGST and SGST or UTGST. That's all we have. No IGST at all, because a composite dealer cannot supply goods or provide service interstate. It is as simple as that. So only CGST and SGST, or UTGST will become applicable. So 1% for manufacturers and traders, 5% for restaurants not serving alcohol, and 6% for service providers. That is 3% each to both central as well as state government. Next, one more very, very important point. When we are calculating this 1%, especially for traders and manufacturers, very, very important point, turnover in case of traders has been defined as, very important point, turnover of taxable supplies of goods only, meaning to say nil rated supply, zero rated supply, exempt supplies are not to be included in the computation of turnover. So over here, turnover of taxable supplies of goods only. We don't include non-taxable supply. We don't include zero rated supply. We don't include nil rated supply. We don't include exempt supply. So it is only taxable supplies put together on that turnover that 1% will become applicable. A very, very important point which should clarify a lot of doubt as far as on what value should we calculate that 1%. Now I'm saying only 1%. I'm not mentioning 5%. That is applicable for restaurants. I'm not talking about 6% that is applicable for service providers, because we are talking only about traders over here. So traders are manufacturers. Turnover of taxable supplies of goods only must be considered for application of that 1% GST, which we had just understood. We have it here, 1% for manufacturers and traders. So that number will include only taxable supplies of goods. Let's be very, very clear. Let's move ahead. Let's understand a few features of composition scheme. No interstate supply. I just mentioned the area of operation of a composite dealer is limited. He can supply goods only within the state. Only intra-state supply is possible if an SSC is registered under composition scheme. Next is also mentioned no e-commerce supply. So any person who is registering under section 10 or taking the benefit of composition scheme registration cannot indulge himself or herself in e-commerce supply. Remember this. So that's another very important rule. When we are talking about supplying, no e-commerce supply, but a composite dealer can have an inward supply from outside the state. Purchases from another state can be made. Remember this. But there is no question of supplying interstate. So purchases can be done interstate, but no question of supply. Now, when we are purchasing from a registered dealer, we are supposed to pay GST. When we are purchasing from an unregistered dealer, the unregistered dealer cannot collect GST, but we are supposed to pay. The composite dealer is supposed to pay under the reverse charge mechanism. Now, as far as inward supplies is concerned, GST has to be paid by the composite dealer. There is no question of non-payment of GST as far as inward supply is concerned. But when the composite dealer is supplying or selling to its customers, composite dealer cannot collect GST at all. So there is no collection of GST on outward supply. That's why I said, when we are purchasing goods from another state or within the state, we are supposed to pay GST, whether CGST, SGST, or whether IGST, we are supposed to pay. But when we are supplying, when a composite dealer is supplying, composite dealer cannot collect GST at all. This is a very special feature of composition scheme. So any business which is registered under composition scheme cannot collect GST from its customers. So no question of GST on outward supply as far as composite dealer or registration under composition scheme is concerned. Very, very important. Every composite dealer, that is one who has taken registration under composition scheme, must compulsorily display a board at the entrance of a shop or inside the shop at a conspicuous place. You know, every customer walking into the shop should be able to see that board mentioned, written clearly as "we are composite dealer." So that will give an idea to that particular customer, saying that this person cannot collect GST. One. Also, this person cannot issue tax invoice. So any SSE who is registered under composition scheme will issue a bill of supply. No question of tax invoice. Point to note, tax invoice is given only if GST amount is collected. Since the composite dealer cannot collect GST, he cannot issue tax invoice. Rather, he will be issuing a bill of supply. And on the face of that bill of supply, it will be printed very clearly the letters CTP, or casual composite taxable person. Composite taxable person. So that is the the notation that will be specified on the face of that bill of supply. Composite taxable person. So this is a very, very interesting and important point. So one is a board at a conspicuous place indicating that they are composite dealers. And second, the bill of supply. Tax invoice cannot be issued by a composite dealer. Composite taxable person, the word will be specified on the face of the bill of supply. So these are a few features. Then we have no input tax credit available. Very, very important point. When we are purchasing, suppose I am registered under composite scheme, whether I'm purchasing interstate or whether intrastate, I pay my GST. There is input tax, but no input tax credit is available. Reason is simple, because composite dealer doesn't or cannot collect GST on outward supply. So there is no question of input tax credit. You cannot set off your input tax from output tax because there is no collection of output tax at all. So the question will arise, manufacturer had to pay 1%. Restaurants, those are not serving alcohol, will have to pay 5%. And a service provider will have to pay 6%. How do you arrive at that? So remember, the composite dealer will have to pay such GST amount from his or her own pocket. This is very, very important that we have to understand. So that 1%, 3%, 5% or 6%, whatever you have, that is paid by the composite dealer from his pocket to the government, because GST amount cannot be collected from the customer. So definitely there is a question of a bit of compromise on the profit margin of the composite dealer, because the composite dealer will have to pay GST from his or her own pocket. Then we talk about benefits and demerits of registration under composite scheme. There are benefits. At the same time, there are some drawbacks or disadvantages also. Let's look at the benefits first, marked in red. Lesser compliances. See, point is very simple. Keeping up of records, keeping up of records of return, maintaining account, all these are not compulsory as far as composition scheme registration is concerned. So there are lesser compliances as far as composition scheme registration is concerned. Also, one more very important point that we had discussed in the previous episode, and that was, if an SSE takes registration under normal scheme, he has to file returns on monthly basis. But if the same SSE takes registration under composition scheme, such an SSE will have to file returns once in a quarter, that is once in 3 months. So once in a quarter means 4 times in a year, a composite dealer will have to file returns. But whereas under normal scheme, 12 times monthly, the SSE will have to file GST returns. So there are lesser compliances, no maintenance of records as well. The second thing is limited tax liability. See, we may have items of 5%, 12%, 18 and 28% under a normal scheme. But in case of composite scheme is concerned, if you are a trader or a manufacturer, the GST rate is 1%, shared between the central and the state or union territory as 0.5% each. If you are a restaurant and not serving alcohol, the GST rate is 5%, 2.5% CGST, 2.5% SGST or UTGST. And if you are a exclusive service provider, the rate of GST is 6%. So 3% to central government, 3% to the state or the union territory GST, we UTGST as we say. So limited tax liability. We don't have that extended tax rate of 12% or 18% or 28% as we have under normal scheme. So limited tax liability as far as composition scheme is concerned. High liquidity, we say, very, very important. You know, the composite dealer definitely is not going to collect GST amount at all. So when he's not collecting GST amount, that means the price of the commodity to a customer will be made available at comparatively lesser amount, because there is no GST rate of 12% or 18 or 28%. So definitely the GST portion will be less, so resulting in high liquidity. You know, there will be quite a few businesses would like to deal with composite dealer because of no GST collection. That is as far as composite dealer is concerned. Next, we talk about maintaining records is optional. I just mentioned earlier, record maintenance is not compulsory as we have under normal scheme. As far as composition scheme is concerned, you have the option. You want to maintain the records, fine. You don't want to maintain the records, no problem at all. Now, why maintenance of records is not compulsory under composition scheme? Simple reason. Records are to be maintained to match the invoices to claim input tax credit. Now, as far as GST registration under composition scheme is concerned, there is no input tax credit available at all. So maintenance of records is also, you can say, optional. Let's look at a few demerits or drawbacks of registration under composition scheme. Limited territory of business. So if an SSE is registered under composite scheme, then very, very important, the area of operation is the state or union territory within which the composite dealer is registered. So limited territory of business within that particular state or within that union territory only composite dealer can deal. No input tax credit. I just mentioned it because, you know, though the composition scheme dealer is going to pay input tax on purchases, whether purchases made from interstate or purchase made from intrastate, GST will be paid. There is input tax, but since there is no output tax collected from the customer, there is no input tax credit available as far as composition scheme registration is concerned. Then we have cannot supply non-taxable goods like alcohol, etc. So if an SSE takes registration under composition scheme, very important, he cannot supply non-taxable goods. Goods which doesn't come under the purview of GST cannot be supplied by a composite dealer. And the last one that we have is no selling goods through e-commerce route. We have just mentioned. So e-commerce route is a no as far as composition scheme registration is concerned. So those which are marked in yellow are the demerits or the drawbacks, and those marked in green are all the benefits. Lesser compliances, limited tax liability, high liquidity, maintaining records is optional, not compulsory. So these are the benefits, whereas limited territory of business, no input tax credit, cannot supply non-taxable goods like alcohol, etc., and no selling goods through e-commerce route. These are some demerits or drawbacks of registration under composition scheme. So that's all we have in this particular session. So thank you very much for your company. So if you would like to connect and collaborate, here's my email ID and my mobile number. So thank you very much once again. Do subscribe. Do share with the people who required the thoughts on this particular subject. And don't forget to comment as well. So thank you once again.